Good evening, friends. At last, the March is over, and I think the kind of wealth destruction it took place in the month of March has been huge, actually. And I'm going to present that number. We almost lost near about 50 lakh crore, if my memory serves me right, in one month itself. And every investor was praying that March khatam ho jaye. And of course, the April seems to have started on a very positive note, while the market has really done extremely good job. We don't know whether this first day on the first new financial year, this really will get sustained or not. It's all function of what happens with Iran and what decision Israel and US decides on the war front. But it was extremely challenging month for the investors, not only in India, but across the world. And in India seems to have taken a much bigger impact as compared to global world for the very simple reason India has been a net importer of crude oil, and whenever crude oil price goes up, the impact on Indian economy, impact on Indian profitability, impact on India's inflation, impact on interest rate movement are much severe. And we also know the rupee came under severe pressure. So that's been the reality. So we are going to discuss about what are the events that took place in the month of March. How do we see the market going ahead? And of course, as we promise, we will take the question on first in, first out in the most transparent manner, so that there is a fairness in terms of picking up the question. So with this, just a small disclaimer that this presentation is only to enhance your understanding about the equity market. It's only for the education purpose. Please consult your financial advisor before buying and selling any stock. Past performance is no indicator of future returns, and investment securities in the market are subject to market risk. So there are many events that took place. Let's be very honest with you, in the month of March. But the one major event that took the headline, and if you remember when I came in front of you on 28th Feb, everyone was talking about AI and how AI is going to disrupt the world and so on and so forth. IT companies came under severe pressure. And today no one talks about it. The major headline is war. And this is how, if politician decides to divert your mind, they are very smart in doing that. No one talks about Epstein file. No one talks about tariff refund that has come. The order has been passed. And of course, one war issue will go in the background. Again, this will come in the front. But the March month was nothing but the war. And this is the escalation no one anticipated has to happen. The first time in the history of the global economy, the Gulf countries has been targeted by Iran. There were two things which everyone thought will happen, because we had Venezuela example. There was a bloodless coup. The Maduro was captured in the month of January 2026. Things went to normal. On the very first day, Khamenei has been assassinated, and some of the top leaderships, everyone thought that this war is not going to go beyond few days and few weeks. But on the contrary, it's still lingering on. It's more than a month now. Not only that, the Gulf countries, which everyone thought that Iran will never ever attack Gulf countries, they have been attacked. So there is a new, what we call, a precedent has been set. There is one more thing which happened, is that the Strait of Hormuz was never been closed, which basically takes about 15 million barrels per day, has virtually come to a standstill, which has never happened. So there are many firsts this is happening this time with this war, and it took everyone by surprise. No one thought that war could be so devastating it impacts so much on the supply side, and despite IEA nations basically releasing about 400 million kind of a barrels, the price of the crude kept on surging. Because a lot of things people thought at the beginning of the war seems to have been found at the misplace. The things are much gravier than what everyone thought about this. In fact, a lot of people underestimated the ability of Iran to strike back, even including me. At one point of time, I also made a statement that, because there is a lot of internal revolt against the local regime, there could be a revolt, and if US has to attack, this revolt will get further strengthened, and this war can come to an very quickly. And on the contrary, the news that are coming in that the revolt which was brewing inside, seems to have come down drastically. So in that sense, it's been very, very this one. OPEC decided to increase from today that supply will increase. Basically, what we call supply will increase from the OPEC nations. Of about 2.6. We don't know. They've announced that. We really don't know how much will actually be result into in a real life. While purely because of there is a supply destruction, purely because of Strait of Hormuz. Second thing, infrastructure has been attacked by Iran, and hence, in real life, how much comes on stream, we need to wait and watch. On one hand, US said that Russia is getting a war money by supplying crude oil. They should stop. Now they said, okay, let's allow Russia to supply. So Trump has been basically clearly not giving clear-cut idea what he actually intends to do. Sometimes he says something else, and he does something else, on and off. So there has been a lot of this one. The biggest, and see, there are one thing that, war gets over and things will become normal. Am I right? There are certain things which the impact has been so bad, it will take years sometimes to restart the facility. Just to classical example, there is a place called Ras Laffan, which is in Qatar, which supplies 17% of the Qatar's LNG export capacity. And unfortunately, this supply will be out for at least 5 years. Why? Because the damage has been so severe, it will take about 5 years. And of course, Qatar has announced force majeure, so they can back out on the terms and conditions. They must have been agreed with the buyers, and you can't do that. Somehow, some of the logistic companies are trying to find a way out from the Strait of Hormuz. What they are saying, they will let's go with the hybrid model. What is the hybrid model? The goods will, to certain extent, will go through the sea route, and whenever there is a blockade on that place, we will basically run through the land route and again take it to the sea route. So yes, it is helping to some extent. Of course, there is a delay, there is a cost escalation, but still it's not having any meaningful impact on the supply side or on the price side. So that continues to remain a challenge. The policy uncertainty has gone up to a different level altogether. Why? On one hand, the Trump says that we are going to de-escalate, and on the other hand said we are going to put 15,000 troops to the Gulf region to take on Iran. Now, it doesn't give a comfort level because one doesn't know basically what's going to happen in real life. Donald Trump continues to remain a big enigma for everyone. He will make some statement, then he will make some statement which are exactly opposite of what he had stated before, and hence the market is not getting any kind of a comfort level of what Trump is doing, and that's increasing more and more uncertainty. And whenever there is an uncertainty, market does not like it. Market loves certainty, and when there's an uncertainty which are of a different level that we are seeing right now, a market is definitely getting jittery. The one big, whether this war gets over tomorrow or day after tomorrow or after 1 month or 3 months, whenever, One thing is clearly is that there is a higher chance of an inflation globally. It's all depend upon how soon this gets over, and hence inflation remain the hike in the inflation remain transitory or transient or more permanent. We need to wait and watch. But the rate cuts are unlikely to happen in the near future, whether it's an ECB, Bank of England, Fed, RBI, and so on and so forth. Why? Because everyone do run a risk of a high inflation. Supply side risk has increased significantly. There are one impact which is a direct impact, and then there are collateral impact. And the collateral impact at this point of time are very difficult to estimate. And as and when that will get crystallized, I think we will get more clear picture. But right now, if you wish to take a loan, please take now. Probability is very high the rate of interest will go up. And even if you wish to take a loan, please go for the fixed rate of interest. Because you can take advantage of the low rate of interest. If you remember, in beginning of 2026, we ruled out any possible rate cut, and we continue to maintain now the possible rate cuts are a little low going forward. If that is the thing, might as well lock in with the present rate of interest. India impact, the crude oil bill is likely to go by at least 60%, because if you look at, then of course I'm going to show the data, how crude oil price from Feb to March has gone up by 60%. And it's a very, very big number that has happened. So I think it's going to be a very big impact on the India's import bill, and that's it's going to impact very substantially. LPG price hike has been done by India on domestic 60 rupees per cylinder, on commercial 115 rupees, but that's not the challenge. Challenge is availability of a LPG. There are many houses who don't have an LPG. They are either switching to the kerosene stove, or they are going to the traditional method. Not everyone has been able to do that. I was reading one article in Indian Express yesterday or day before yesterday that how people are, at least in Bombay, are going back to their town. Why? Because they are seeing a challenge there in terms of, that's a challenge that's basically, and once the labor goes away, it also creates a supply side issue for the companies, because if you don't have a labor, how do you basically produce goods and services? Till now, India has resisted to pass on the high crude oil prices to the end customers. But to reduce the burden on the OMC, they've reduced that excise duty by 10 rupees per litre, both on petrol and diesel. But if this has to go on, eventually government will have to bite the bullet. And they will have to increase the price of petrol and diesel. I think they will have live with a limited choice. If they don't do it, according to me, it's a very, very bad fiscal prudence on the part of the government. Because let market forces decide and increase the price if that is the case. What is wrong with that? But yes, today you don't want to increase the burden. Who knows, once the election, that 4 assembly election gets over, this might happen by the government right now. And there is no doubt there is a fiscal pressure on the government. Why? There are two kind of an double whammy the government will have to take into consideration. Number one, the expenses will go up purely because of higher import duty bill. Number one, and number two, the remittance from the NRIs will take a beating, and a lot of revenue comes from the Gulf region, which has been extremely disturbed. And number three, the subsidy bill of the government of India is going to go up, whether it's a fertilizer, whether it's an LPG, whether it's a kerosene, whether it's the petrol and diesel. I think that's where the government will find it difficult. Now, a classical example, because of the poor market sentiment, IDBI divestment, which is supposed to happen, did not go through. Now that also gets into, because government has some targets for the disinvestment in the current financial year, and most likely that is also going to not happen. So that's another challenge that India is going to face. So apart from war, there are other key developments that took place in the month of March. First is that we all know that Supreme Court passed an order that tariffs are illegal, but it did not suggest whether the money, whatever the tariff which has been collected, it has to be refunded or not. And now the US court has given an order that it has to be refunded. Okay. Second thing, that 24 US states have basically challenged even new tariff of which basically which where Trump wants to increase from 10 to 15%. That's another challenge that has happened. FOMC did not go ahead with the rate cuts in the March FOMC meeting, but at the same time, another setback for the what to call Trump. Why? Because the court rejected allegation which has been put against Jerome Powell, saying that whatever the renovation that has been done, it is illegal. So that's another setback for the Trump, and still there is no certainty whether Kevin Walsh, which was supposed to be taken over as a replacement for Jerome Powell, is going to happen. Powell terms ends on 15 May. Kevin Walsh has not yet been confirmed, and Jerome Powell did mention that in case there is no replacement been found, he would continue as a Fed chairman till the successor comes into play. And anyway, Powell has not given a clarity whether he will continue post giving up the post of a chairman on the Fed board. But logically and technically, he can be on the board till 2028. For some reason, he remains to be on a 2028. It could be more headache for the Trump in terms of the policy action. The Feb inflation data coming in 3.21. This is before the war impact. So try to understand the war impact will have an impact on the inflation. Everywhere you see the prices are going up purely because of people are putting fuel tax and people are putting so on and so forth. It's going to go up whether we like it or not. The Goldman Sachs has reduced India's GDP to 5.9%. There is a mistake. It should be calendar year 2026, not FY 2026. Okay, even the CA, which is nothing but the Government of India body attached to the Ministry of Finance, says that there is a risk because they predicted 7 to 7.4% kind of a GDP. It's likely to come under pressure. And I was saying that IDBI Bank did not go through purely because of which market sentiments are so down. It's not going to happen. That's on the India side, but globally also, like for example, China set 4 to 4.5% GDP for this year, which has been the lowest since 1991. तो last 35 years का जो GDP growth नहीं हुआ है उतना, so they are targeting only very low GDP, and that gives an idea about how the sentiments are there. So most probably the global GDP for this calendar year, that is 2026, is going to be extremely challenging. On the top of it, there is a possibility that El Nino will happen, and if that happens, there could be two things which will happen. One is that the agriculture can come under production of output of agriculture can come under pressure, which can stoke inflation, number one. Number two, the purchasing power goes down, especially in the rural economy. Why? Because no agri output. And third, normally there is a belief that whenever there is a global uncertainty, the price of bullion goes up. This time, both gold and silver declined in double digits in the month of March. So, which clearly shows how fragile the global economy at this point of time. Had it been a normal situation, the actually price of gold and silver would have gone up. But why? Because some of the central banks are selling gold because they need to meet the contingency to do that. Very quickly go through some of the data points for the month of March. Advance decline ratio continues to remain below 1, and if you look at this advance decline ratio, you get an idea, which is the lowest in last 12 months, 0.73 only. That means more company decline as compared to advance. And 5 months in a row, you have seen this advance decline ratio below 1, which is, I can't recollect in the recent past, we have seen this kind of an advance decline, so poor advance decline ratio. So you can imagine the kind of wealth destruction that has taken place. Today afternoon, I was having a meal and Joyson was also there, and he was talking about that some of the investors have, and of course he showed some I don't know what the source of that, but he was saying some of the leading investors, and he was talking about Dolly Khanna and Vijay Kedia and so on and so forth. Their portfolio taken by 50-60%. That's what he was saying. I have not cross-verified this data, but the wealth destruction has taken place for sure in not only with the prominent investors but also the retail investors. And the reason why is this: India's market cap, if you look at it, it's very similar to what it was in April 2024. तो जो 2 साल में Indian market has given time corrections and price correction, and hence a lot of enthusiasm which was there with the retail investors is on the ebb. Actually, this is the first time into FY 2026 that retail investors taken money out of the equity market. They've taken money out, so they've not put in money. They've taken money out. This is the first time it has happened post-COVID. So somewhere, because of the poor market returns, investors now started losing little hope on the equity as an assets class. We lost almost 51 lakh crore just in 1 month, which gives you an idea about how poor the sentiment was in the month of March. While the market has fallen the higher volume. Why? Because the cash volume average in the month of March was 1.25 lakh crore, which has been the highest in last 12 months. So it's not a very happy sign, to be very honest with you. When the market has fallen with the high volume, that means there's a genius. Normally, when the markets fall on a lower volume, it does gives an hope. But I'll come back to you on that because not necessarily every time that rule has to apply. But the normal belief is that whenever market falls with the higher volume, it's not a good sign. Okay. Everything goes on the red. Actually, but some of the sectors show a lot of resilience, like pharma down by only 3%, CPSE down by 2.6%, IT down by 5%. But look at PSU Bank, 20%, Bank Nifty 17%, Realty 70%. The Sensex itself is down by 11%, Nifty down by 11%. We don't see this kind of severe fall in 1 month in this. So if you ask me, 20% decline in 1 month in one index, you can imagine the kind of damage it would have done to the constituents of that index. And that is what has happened. So yes, the damage has been very, very severe in the month of March, and that's the thing, purely because war did create a lot of problems. How many companies advance in Nifty 50? Only 4 companies. Coal India purely because of more coal demand, because the more dependence on fossil fuel in absence of the crude oil. So that's one which has done extremely well. Again, its dividend yields are very, very good. ONGC, which was also our stock of the week, up 1 point. Take Mahindra, foreign change is up by 2%, and Sun Pharma up by 1.2%. But look at Tata Motors down by 22%, IndusInd Bank, Bajaj Finance, Shriram Finance, Adani Enterprise, SBI. Here you can see, and of course HDFC Bank, which had a corporate governance episode, which really reflected in the number. So basically, more heavy selling took place in the NBFCs and especially in the BFSI space, which really created a lot of havoc for the investors. FPI has actually highest ever sales in single month has happened in the month of March, 1.17 lakh crore, and 2 years in a row, that is FY 2025 and FY 2026, 2 years in a row, FPI have been net sellers. जो कुछ पैसा उन्होंने सिंस 1991 से चालू किया था इंडिया में इन्वेस्ट करने का, in last 2 years they've taken out 27%. 27%. So you can imagine the kind of outflow. On the contrary, the March, the DI bought very heavily. Why I'm saying very heavily? Because you look at it, they pumped in 1.42 lakh crore against February ka of 38,000 and January ka 69,000 crore. And yet, so while despite DI bought more than what FII sold, yet market lost 11 to 12%. So you can imagine the quantum of impact FII selling had on Indian equity market. Broader market was very, very bad. The Nifty 50 down by 11%, BSE mid cap 150 down by 11%, small cap down by 10%. So in a way, the mid and small cap did outperform as compared to Nifty, the large cap. But that numbers are not so significant that basically makes sense to make a sense of it. GST collection is 2 lakh crore, which is good, but it does not reflect what happened in the month of March. Why? Because what you basically pay in March is what you collected in the month of Feb. So I think the April data would be very, very critical to understand what kind of impact it had on the GST collection because of war. Rupee had one of the steepest fall in 1 month, 2.58% decline, which has happened. Of course, we did breach 95 mark, but average was 93.5. So you can see we almost lost about 10 rupees in last 1 year on rupee, which is a very, very severe fall, which has happened purely because of crude oil impact India is having. India, unfortunately, was one of the first performing market in the month of March. While everyone closed in the red, but our fall was much, much higher as compared to whether it's a Nasdaq, whether it's a Chinese market, SSE composite, or whether it's an S&P 500. This is the spike that I was talking about, 69 to 112. And if I have to look at the 121 barrel on 27 March, you can imagine, I think that the impact is so severe on India. In 1 month, we have seen almost $60 per barrel increase, which is almost doubling of what we have been paying till Feb end. And of course, it's all depending upon the impact could be severe, medium, or negligible, depending on how long this war continues, how long the Strait of Hormuz basically remain closed. That's a very, very critical. Historically, April has been good month. So whenever there is a sharp decline, like in March 2020, there was a sharp decline, and April was a very good month, 14.4%. But overall, if you look at it, April normally close in the green. Who knows? I think because the kind of severe fall that we have seen, value buying can come in the month of April. It's all depending upon the news flow, what happens on the war front. Gold till now in 2026 is up by 7.8%, but it did have a very sharp fall in the month of March. From this level, it came down to, and of course, we shown some late buying in the fag end of March. Something similar happened with the silver, is up by 3%. So in other words, the gold did better as compared to silver in 2026. So what do we expect going forward? Very quickly. Geopolitical situation continues to decide what will happen to the market sentiment, not only in India, but globally. And I think market will try to take a cue what Trump is saying, what Iran is saying, what Israel is saying, and that's going to basically clearly get an idea. Right now, Israel doesn't seem to be in a very what we call in a consolidated tone. Actually, they seem to be aggressive. They were aggressive, and they continue to remain little aggressive only. So we don't know what happens with the Israel, but US and Iran, the leadership is giving an indication that they want to find a solution to this, because both are suffering very severely on that. On 9th April, RBI monetary policy will be there. We don't expect any rate cut. On 30th April, Fed is going to meet again to decide. Again, we don't expect any rate cut there. But there is a high possibility that we could expect somewhere in the down the line the probability of rate hike from the central banks. We are in the month of April. March numbers will start coming out. And I think, and today, a lot of companies, they come out with the business updates. Am I right? Some are positive, some are not so positive. I think what market will definitely look at is that what kind of impact they see because of war on their profit and loss account, on their demand outlook, and on their logistic costs. I think that's going to be very, very critical, that market will look forward to not only the numbers which are going to come. So March numbers are not going to be so bad, but how are they seeing the first quarter numbers? I think going to be extremely well, because का जो impact है, which will start reflecting in the first quarter more as compared to the last quarter of FY 2026. our sense is that more and more management will remain, give a very cautious outlook, and how market reacts to that will be very, very crucial to see. So right now everyone talks about war and war, but once the episode goes out of the window, I think again people will start talking about the AI related disruption. People will start talking about tariff dynamics, which has right now taken a backseat. In Feb, no one talked about Iran, and everyone talked about AI. In Jan, people talk about tariff, and again this can make a comeback. So the market situation is quite evolving, quite fast, and my suggestion to all of you would be that be nimble-footed in this market. Market is going to be basically likely to remain a little choppy, but as and when market is going to bounce back, वो स्प्रिंग जैसा हिसाब होने वाला है. स्प्रिंग को बहुत दबाया जा रहा है, और जब भी होगा वो बहुत तेजी से करेगा. अब now that happens in 1 week, 15 days, 1 month, 2 months, I don't know. But it's going to, because India's valuations become extremely good. If you look at the Nifty 50 price to earning trailing 12 months, we are below 1 year, below 3 year, below 5 year, below 10 years. In other words, some point of time we should see a value buying. Today, we saw a very heavy value buying in the market, and something similar will happen. And if for some reason, if this value buying continues for next couple of days or 3-4 days in a row, I think the complete sentiment will undergo a tremendous change. So how it's going to happen, when it's going to happen, no one has a handle on, because we don't know. It's very difficult to read the mind of Trump. But as and when that's going to happen, it will happen. Now, our wish list is that we should always be able to buy at the bottom. वो रियल लाइफ में होता नहीं है. एक होती है ख्वाहिश और एक होती है रियलिटी. एक ख्वाहिश होती है कि भाई हम बॉटम में ले पाए, होता नहीं है. But as and when that will happen, it is going to bounce back. Just to give a classical example, we own one defense company in our PMS portfolio. That company was a completely underperformer. Okay, and today it was almost up by 20%. So जो underperformance का जो था, so this is a way. So what I'm trying to convey to you people is that as and when the rise will happen in any of this, the rise and high could be very quick and very sharp. So that's what's going to happen. With this, let's open the floor for question answer. So can you see my screen? Can I just refresh it, if I can refresh it so that I can see? So Srikant has put a question: top, mid and small cap picks. Please go ahead and buy. Look at our website. We have top Mojo stocks available, and you can then also available in terms of mid and small cap. Please pick and choose, and you can do that. If you don't want to do that, you can run a screener on our website and find out what are the top picks in terms of mid and small cap. Do you expect me to give any tips here? The answer is no. We don't. As you know that we don't pick up any company specific query because my compliance team has clearly told me I cannot do that. Let's go back to the second question is a test, so I'm going to leave that. Anurag Gupta, I have two portfolios, moderate and aggressive. Both are down for quite some time, but I'm comfortable because you're hand holding. Thanks a lot, Anurag ji, for your kind words. We are trying our level best that how much pain we can reduce. Of course, everyone is going through the pain period. The only thing is that how much less pain you can have in this kind of a market, and we will keep doing hand holding, sir. I'm thankful to you, sir, appreciating this, and we have done in the past whenever market has gone little topsy-turvy, and we'll continue to do that. So we will do that. Let's move on to the next question from Dr. Arun Kumar P. Damania ji, namaste. As per present situation, Nifty come down which level? Is there any market case, your opinion, sir? So, sir, why market is down? Because of war. And why war? Because of Trump. Am I right? It's very difficult to read his mind, to be very honest with you. So, I don't know which level the market will get settled down. In fact, if you remember in one of the webinars in March, I did mention that I do expect maximum 2 to 5% fall. On the contrary, from that level, market did come down a little higher than that. So, was I a buyer in this market in March? The answer is clearly yes. And because as I said, Dr. Saab, that if you look at the Nifty 50, what we call the price to earning, it is below a 1 year level, below 3 years level, below 5 years level, below historical 10 years level. So as and when market will see buying, we are going to see a very sharp upturn in the market. And hence, don't try to see bottom, because you will not be able to buy the bottom. Remember, lesson that. Look at the risk reward ratio. So I don't know what will happen in 1 month, 3 months. But I'm pretty sure that next 12 months down the line, market would be substantially higher than what it is right now. So my suggestion would be, don't try to time the market. If you have funds, time is to increase allocation to the equity. That's what my answer to you, Arun Kumar sir. Then we have Vivek Karandikar. If the present war situation continues for another couple of weeks, what should be the strategy for short-term investment investment horizon of 12 months? Assume that this goes on for a couple of weeks. We would see price of crude oil remaining at the elevated level. We will see rupee coming under pressure. We will see more FPI outflow from the market, and so on and so forth. But if your investment horizon is 12 months, don't try to see how much downside right now market can offer. Your mental question should not be the downside now. Your question should be, as and when market bounce back, how much upside I can look at it. So you have to basically change your question to your mind. Saying, मुझे downside नहीं दिखना, मुझे upside दिखना है. If I invest right now, assume that I'm going to see another 10% fall in my portfolio. But after that 10% portfolio also, do I expect market to go up and compensate for the risk I'm taking? Most probably the answer is very much yes. So I don't know what the bottom would be in the market. I'm not an expert to say that, and there are so many levers which are beyond my control, which can basically help me to understand what level we can choose. But remember, if you are not very close, we are not at the bottom, I'm very certain we are very closer to the bottom, if not at the bottom. And hence, I have been buying in the market, and I continue to believe. I must tell you, in our PMS, we are fully invested. We are fully invested. Because and today, our performance has been so spectacular that you will not believe in a kind of a stuff in PMS. So, because we know that as and when the market is going to bounce back, it's like a spring effect. जितना दबा है, जितना और दबेगा उतना जोर से उछलने वाला है. और जब भी उछलेगा, we will all repent. Why did we not invest at that point of time? Amitabh Nath sir, going forward in next 6 months, which market cap, which sectors like to do well? Which can we look to invest now? Your advice, please, from Amitabh Nath Roy. So, Amitabh sir, I had said in the past also, I personally believe the large caps should do well as compared to mid and small cap at this point of time because of the global uncertainty. Number one, again, the valuations have become quite reasonable of the Nifty 50. Number two, I think those who are export focused, so like pharma, maybe IT could have some amount of a tailwind because of the dollar appreciating against the rupee. That could add to my top line and the bottom line. So these are the sector which could perform well for the market. So that's what my sense would be. The pharma definitely is one of the top pick that I would believe should do well. And if, as I presented the data, it has shown a lot of resilience in this market. So they've outperformed. CS Srihari sir is asking, even if the war ends, what is the impact of India and the market in long term for the financial year 2026-27? Assume the war ends. The crude oil price, the weight has gone up almost double, equally fast it will come down. That benefits country like India. Since when the crude oil price went up, India is among the worst performing. It will reverse the situation. When the crude oil price comes down, India may be among the best performing market. The valuation of the Indian equity market has become very, very good. So my sense is that if the war is going to come to an end, I think Indian market should do well. In FY 2026-27, will Indian equity market will give positive returns? Answer is yes. Answer is yes. And today, the first day of the new financial year, market did extremely well. You would have seen in your personal portfolio also, it would have done an extremely good job. Let's move on to the next question. Sanjay Gupta sir, has the market bottom out for the near term? I don't know, sir. It can further come down, but the risk reward is definitely turning very, very positive, Gupta sir. Next question, Pradeep Khan sir, how will pharma perform in the near future and long term? Will it benefit from falling rupee? What are the challenges? My answer is clearly yes. I do believe that pharma should do well, and it has done reasonably well even in the month of March. It is close in the red pharma index, but relatively less as compared to the what has happened. So 3.5% kind of a decline as compared to overall market declining by 12% or so. The next question comes from Pradeep, from Rinku Narang. Earlier, we had invested in several ETFs. During the recent market downturn, these ETFs, India and US, have declined relatively less compared to the individual stocks, which have fallen more sharply. In such a scenario, would it be advisable to switch from ETF and invest in the model portfolio? Has the market to GDP ratio improved to a more comfortable now? At present, some stocks are categorized under strong buy. Is it advisable to invest in such stocks at this stage? Additionally, I would like to make a request. On days when market experiences significant decline, kindly consider sharing your insights or motivational thoughts on social media platforms such as YouTube, Shorts, or Twitter. This would be great help to investors like confident and focused during volatile times. So, point taken, Rinku Narang sir. Whenever there is a more decline, maybe we'll try to make a YouTube Shorts and present in front of you so that you get more reassuring kind of a stuff. ETF fallen less as compared to the broader portfolio. That normally happens in individual stocks. When the market goes down, the index falls much less than the overall market. But when market rise, the same ulta happens. Like as I was explaining you, we do own one of the defense company in our PMS portfolio, was almost up by 20%. Market did not go up by 20% today, but the scrip went up by 20%. So that's what happens. So in bullish market, scrip will outperform. In the bearish market, index will outperform. That's what happens. So now you need to take a call, Rinku sir, whether you expect market to go up or go down, and accordingly you can basically make your strategy based on that. Okay. Has the market kept to GDP improved to more comfortable level? The answer is clearly yes, it has actually. So the only challenge now, what is the denominator you put it? Okay, India's GDP, nominal GDP for FY 2026 would be about 350 lakh crore or so. Do we expect nominal GDP of 10% growth, which was estimated before this Iran war happened? So that can give you 390 lakh crore kind of a stuff. So market ko GDP has come down to about 110 or so. I'm not saying it's a cheap, but it has become quite reasonable as compared to what it was 150 or so. So in that case, it has become a little reasonable. So that's the thing. And at present, strong buy, should you buy? Please go ahead and buy a strong buy. It makes a lot of sense because they are available at a very good price. And the very fact that in such a volatile time, if they are strong buy, that shows some inherent strength in this company, and hence probability are very high this company is outperform the broader market. Anil Kumar Rastogi sir is saying there is an audio problem. I don't know. Is there an audio problem you people are also facing? I don't know. Because no one else seems to have complained, sir. I think maybe, sir, it's more problem with your system. Please check that. This is Rahul Tyagi is saying, hello, sir, with India P now around 20, down from 23, 24, but still higher than the other emerging markets like China, Brazil, Indonesia. Do you see FI flow continues to shifting to cheaper markets going forward? Also, can we expect more frequent webinars from you and Dr. Mohit during such volatile periods as they seem to have reduced or get cancelled lately? Point taken, I can't recollect, Rahul ji, that I have cancelled any of my webinars. Whenever I have promised, I'm in front of you. So it's not that, normally I'm trying to be in front of you at least once in a week, because I also do one exclusive webinar with our PMS customers. And then other webinars been lined up, so it's practically not possible for me to come almost every day. But Rinku ji suggested that why can't we do a YouTube Shorts or on Twitter? We can come out when the markets are a little volatile. In terms of valuation, sir, Rahul ji, Indian market always commanded a premium as compared to China or other Brazil or Indonesia historically. What has happened that gap premium has come down drastically, and hence it makes what is basically, if you look at the historical average premium that India used to command as compared to some of the emerging markets, I think that's below the average. In other words, Indian markets become extremely attractive, not only in terms of absolute but also in terms of relative terms. So if you look at the history, whenever FPI sold very heavily in 2 financial years back to back, they have been net buyers the next financial year. So going by that trend, they should become a net buyers purely because of the valuations become very, very attractive. As and when the crude oil price, which I strongly believe will come back to normal when the war ends, which India will again get the benefits. So today, too much pessimism is there built into the price, which will get corrected very soon. So my sense is that it should happen. So FPI should come back very, very strongly. So that's what my sense is. So don't get too much what we call concern about FPI. I think they will come back very strongly. Sunil Kaul, thanks for sharing your thought in March with list image. I'm happy to be a member of Mojo. Thanks a lot, sir, and happy to see more messages like this. I think we got one email from a gentleman, Mr. Patel or someone, and he has sent a very nice email to us. He said, I've been investing through model portfolio and I've been investing through mutual fund. And in FY 2026, the model portfolio did better than my mutual fund. And he was saying, thanks a lot for helping us in this crisis. And I think you are what we call saying very similar, Sunil ji. So thanks a lot for this. Gopi sir, good evening. What is the Nifty target for December, taking into consideration crude oil price going up? So sir, if you remember, I had said 15 to 20% gain in Nifty 50 in calendar year 2026. Am I changing my view on that? Despite big downfall in March 2026, the answer is no. I continue to believe that Nifty 50 in 2026 will give 15 to 20% return. These returns will be more back-ended, in the sense more second half than the first half. Why? Because of a lot of the news flow may not be so positive even on the earnings front. Why earnings front? Because of crude oil price, we don't know El Nino impact, and hence that's a thing. And somewhere in the second half, market will become more positive, and we will see 15 to 20% gain being made in Nifty 50 by end of December 2026 over December 2025 closing level. Then Avijit Datta, sir, what is the expected range and closing level of Nifty 50 index on 31st March, considering the current macroeconomic condition, FII flow, global cues? Additionally, what are the key risks and catalysts that could be influence the market direction on that day? So yeah, I think you are talking about the 31st March 2027, it looks like. So I don't know, I cannot give you the range, but I do expect market to give double-digit returns by April 31st March 2027. Unfortunately, the risk factors are coming from nowhere. If you would have asked me in January 2026, do I see Iran as a risk factor, I would have said no. After Trump coming in, the risk factors are coming from nowhere. Out of blue, it's coming in. And it's become extremely difficult for someone to make a sense of it. So I don't know. The reason I believe little bullish on the market purely because of, you look at the GST collection, 2 lakh crore. The data which RBI released, I think yesterday or day before yesterday, about the credit growth has been extremely good. But of course, this data is till October 2026. we don't know what happened in the March 2026. One of the reasons why some of the banks have cracked so much, because there's a fear that NPA can go up because of this crisis of war. So my sense is that the Nifty 50, the values has become very, very attractive. And what Vijit sir, there's a niyam in the market, there's a rule in the market. The bottom of the market always get formed at the peak of the crisis. And I personally believe, I think we have seen peak of the crisis. Now more conciliatory notes coming in from the Iran, from the Trump, it does give the impression that we should see some amount of a reconciliation in terms of this war. People will come on the discussion table. They will try to find a midway out. So it looks like a win-win situation for US also and for Iran also. And we see situation coming back to the normal. That's what my sense is, Avijit sir. Then Mohammed Kanu sir, alternative to shipping line to move energy is very costly mode. I don't think it's viable option. So sir, you are right. What happens, Mohammed sir? One is the price and second thing the availability of. I think today the world wants to focus on the availability of the product rather than price of the product. Am I right? So कौन से price में मिलेगा, people wants to buy because it has a very cascading impact on the globe, on the economy. So today price is not a consideration, availability is a consideration, and hence that's the reason why we see kind of a hybrid model, some to sea route, then land, and again the sea route. So I think that's what the idea is, not the price, the availability, sir. Frank Empire, with 2 years of almost zero returns, what thematics we play out onwards? I think the thematic would be definitely the sector. Basically, the theme would be more the domestic consumption. Theme could be more of an export also, and I'll tell you why. So if you have to really fast forward and go into March 2027, most probably India would have that working trade agreement with the European Union. So it will open up the huge Europe market for the Indian exporters. Rupee depreciation acting as a tailwind, which will again further help you to improve your margin. So if you ask me, export as a theme can play out extremely well. Right now it looks very challenging, but you have to fast forward. It looks very, very promising to me. Second thing, government will have to do a lot of capex. Why? Because I don't think private capex will come very soon. To keep the economy humming, government will do the higher capex allocation to see that economy keeps keep growing at the decent pace. So I think these are three sectors which will keep doing extremely well. So that's a theme that one should actually play. That's what my suggestion would be. Saji James, for the last 1 year, you have confidence that FI will come back with support of lot of data, but things are just opposite so far. What your call on this? So you are absolutely right, and I must thank you for your good memory, Saji, because yes, you are right that I have been extremely bullish on FI inflow. In fact, I had predicted that in 2025 calendar year, FPI would be positive. They were actually net sellers. So there are many events that took place which were not conducive for India, like we had seen tariff when India was singled out by Trump very badly, which happened somewhere, and we got 50% tariff by way in the month of August and so on. So what that really spoiled the sentiment of the market and of the FII. Another reason was valuation, no growth in earnings from the India, and that also played its own role on the market. But as I said, yes, I know I was proven wrong once, and I can be proven wrong again also. But I continue to believe that FII should, because the kind of outflow they have seen, I think somewhere they will also become a little sensible and see, does it continue to remain so much negative in Indian market when things are turning positive for India, in the sense that the growth in earnings of corporate, the valuation has become very, very reasonable now. So they should, but I can still go wrong, Saji sir, and these are the things which you always have to, this kind of prediction you should always take with tons of salt, whether it can go up or go down, FI flow, we need to wait and watch. In fact, what I'm going to do is that I'm going to make, once this result season gets over, I will have a lot of FII data coming in of March 2026 net shareholding. And I will show you what CAGR FII made on Indian market since they started investing. And when I was looking at, and most probably my gut feeling is that the numbers would not be very exciting. Okay, but of course that's a debate for some other day. But limited point, I do expect FII to come back. I can go wrong the way I've gone wrong in last 1 year. Deepak Jairam sir, in the light of recent developments, namely war, supply chain disruption, possible fiscal, do you think we need to revisit the annual growth estimates and other forecasts made at the beginning of the year? At this point of time, no, sir. I do believe that I am seeing at least a light at the end of the tunnel. Next 7 days, who knows? We could see a very positive development on the Iran front, and if that happens, the crude oil price, the weight has gone up, may come down. Values of Indian market has become very, very positive, and hence, right now it doesn't call for it. But for some reason, if it happens, it continues for a longer period, then yes, it may force me to revisit. So most probably, we should revisit somewhere in the month of July or so. Right now, it doesn't warrant me to revisit this data, to be very honest with you. MSP, ideally, it is not appropriate to allow posting of question by viewers before completing your presentation. Those who presently listen to your presentation and then raise queries based on presentation is likely to see the posted question will not get addressed because it will be much lower position in the list. Your point is valid. I think you have a very valid point. But MSP, sir, people do come and they want some answers to their query before they come for the webinar. So while you have a very valid point, what we can do, maybe we try to extend our webinar so that at least people we do take up questions of people who have post our presentation. It's a very valid point. We'll discuss internally also how can we tackle this. Bharat Bhai, very quickly, what is the exit scenario of HDFC Bank? Should one vary if either shareholder and account holder has a big cash balance? I would not like to make a comment on the share price of HDFC Bank because my compliance team doesn't allow me to open. Even I am an Imperial customer of HDFC Bank. My demat is with HDFC Bank. Am I withdrawing the funds? I'm closing my account. The answer is no. So I don't think you need to move your money from the HDFC Bank because of this episode. Okay. As far as share price is concerned, please look at our score on the website and take a call on that. I hope that answers. Gargi, please share your view on HDFC Bank. Oh, I think we discussed that. A leading private sector bank is facing gone issue. Your view, Srinath Sitaram sir, you are anyway referring to the HDFC Bank. I've cleared that with Bharat Bhai's response. Sitaram sir, Badri, Guruji, it seems inflation will stay longer. How PSU Bank likely to perform in this situation? So Badri sir, if you look at it, the PSU Bank seems to be on a more better position in terms of credit deposit ratio. So while I do understand that they've taken a huge beating in the month of March, but I think the credit growth could be much better in terms of, I know some people do have concerns about some kind of a concession being allowed by the government for the MSME that could result into a high NPA. But the kind of fall that we have seen in the month of March within the PSU index, I think a lot of things are already there in the price. So further decline looks a little difficult. That's what my personal opinion, Badri sir. Anil Kumar Rastogi, please advise on NBFC, metal and energy sector. Energy looks extremely promising. Metal looks a little challenging purely because of China growth, which we all know has been lowest since 1991. That's what they have been predicting. And the global uncertainty is also impacts the metal. NBFCs, I think you have to be a little careful because NBFC is a very wide and broad term. Some NBFCs are related to gold. They may not do well because of correction in the gold prices. Some which are focused on MSME may face some problem in terms of higher NPA. Some NBFCs are more to the housing loan. They may not do well because there is a slowdown in the housing portfolio. But some those who are more into the retail side, I think they may do well. So you need to pick and really choose which NBFCs sub-segment you want to focus on. So overall NBFCs may not do so well, but within the sub-segment may do well. So you have to be a little careful with the stock selection there. Namdani sir, do you measure consistency of a portfolio stocks with various strategies? If yes, what is your measure of consistency? Can you subscribe and check that out? So I don't know, sir, what do you mean by consistency and what period we are talking about? Okay. So these are the good data of the consistency. But if you look at Namdani sir, if you look at our consistency of last 5-6 years of a model port, which is all available, we've been quite consistent in terms of performance. Of course, there have been years, there have been quarters where we did not perform well. But otherwise, if you have any portfolio, Namdani sir, you have been with us for many years. Look at any of your old portfolio and look at the periodic returns, how consistently we have been. I think we have been quite good in that sense. But I don't have a readily data available to share some data with you. See, remember, there is also a challenge that we have. Our model portfolio now does not assume that you bought and sold. Now you need to come on the website and you need to generate the advice. Now that consistency also is a function of how diligently you are following our advice. Now, and if I have to compile all the data, some are following very diligently, some are not following very diligently, there are some delay and so on and so forth. How do I get the data of consistency? Because I cannot take a credit or get penalized if the client is not following our advice in a very disciplined manner. I hope you get what I'm coming from, Namdani sir. Last 3 questions in the interest of the time. Of course, I know there are more questions are being lined up. So if I can take up Suresh Joshua, on days of significant dips, I'm investing in tranches in multi-fund flexi cap, large cap. What is your opinion on this? Sir, as long as you are doing it right thing, I think you please continue doing that. There is nothing wrong of what you are doing. I personally believe that large caps should do well. So if that is the case, maybe you should revisit your flexi cap as a strategy. That's what my suggestion would be. Nilesh, sir, currently my home loan is not floating interest rate. Please advise, should I switch to fixed interest rate? Please do that, sir. But look at what is the rate of interest they are offering on fixed rate. If it is 200 bips higher than floating, then it doesn't make a sense. Are you getting my point, sir? But if it is coming at the same, what is floating and fixed, to lock in kar lo. And not only you, Nilesh sir, everyone should do that. PK said, sir, is 2 questions, sir. Your website not updated. Example, HDFC PE also did not change when it tanked. Furthermore, other websites were updated. For example, Money Control, Economic. Please do I had called and nobody email name back. I'll look into this. अरे मुझे ये भिजवा देना भाई. Why it has not changed? It should logically change. Why it has not changed? We'll look at it. Adil Ankit Thakkar, I can get a house loan top up interest at 8%. Is it good idea to take and invest in equity now? No, sir. There are 2 different things. When you buy a house, take a home loan, because that's the cheapest way you can borrow money. Why? Because it's a secured loan, and never ever repay the housing loan till its tenure. But should you take a top-up loan to invest in the equity market? We don't advise that. Don't, and never ever do that. It's a very high-risk strategy, and if market for some reason does not do well, you'll end up money very badly. So not only you'll keep bearing the interest cost, you'll have a mark-to-market portfolio loss, and that will frustrate you. So never ever do that. Only आपका दुश्मन आपको suggest करेगा yes करने के. Last question, Sodhi sir, which are the preferred sectors to buy today? Which anyway I have given, so I'll go to the next question. Kingston stocks, sir, auto, sugar sectors. Your opinion, please. This is the last question I'm taking. So sugar looks a little challenging right now, despite the crude oil price going up, ethanol opportunity opening up. It looks a little challenging at this point of time, because my sense is that the sugar cane availability could be a challenge if there is a El Nino impact. So that's one. And auto, little bit stock selective, because the companies, those who are refreshing the products very nicely, I think they will do well, but not all. And I personally believe those who are focused on EV are likely to do much better as compared to the non-EV. So what has happened because of this crude oil price going up, again EV is making a strong comeback because the running cost of EV, the maintenance cost of EVs are much lower than what your diesel or petrol cars are. So I think it's making a lot of sense to look at the company that are refreshing products and focusing more on the EV. With this, I know I have missed out on few questions of 1, 2, 3, 4 only. Not many are there. So that's the thing. But more or less, I've been able to cover almost all questions basically. So I think I missed out on Anil Kumar Rastogi. But Anil Kumar Rastogi, I think I did mention, take that question. Mahendra Kataria, no problem. I don't know what the question is. Infinity Portfolio AU, he was asking what is the view on data center. So I think we have taken almost all questions. So with this, thanks a lot everyone taking time out. Tomorrow I am in front of our PMS customer. Do join me if you are a PMS customer. Good night. Take care.